Well, hello again, everybody, and welcome back to another edition of the Forex Market Preview. And I have to admit, guys, I am terribly sorry. I was out of town 2 weeks ago, and last week I had all set up to do a special presentation of the Forex Market Preview from the road while I was out. And, of course, I got strep throat. And it was a bad case of it. I had a really, really hard time. It knocked me out for probably a week. Had to cancel the syndicate for the week and stick them in a Keel's live trading room, which I'm told just went swimmingly. So I'm really glad I was able to do that. It's kind of hot down here. The weather has been cooler around here recently, but this jacket is not helping me. All right, so what are we going to do today? I thought that today it would be a good idea just to run a cursory overview of some of the stuff that I am watching in the currency, because I'm straight with you. When I had strep throat, I did not take a lot of time to go over the charts. I was laid up pretty good. And so I really just this afternoon before the markets open started taking a look at things and trying to figure out exactly where we were going to be with it this week. And it's kind of nice to take a step back. And because you get a fresh perspective. The market had a lot of time to move. We had some wild gaps and a lot of stuff going on. So when I came back into it this week, it was almost like I was looking at everything with a fresh set of eyes, and it's really, really nice to be able to do that from time to time. I do want to tell you guys before we get started that the live show, guys, is coming back. It is coming back on October the 6th. And we're going to, the format, if you guys watched it before, the format is changing. We're not going to be doing such an educational economics show. We're really gearing it more towards current events, a little bit of politics, more about how that all affects the financial markets and where the trading opportunities are going to be. So we're going to be discussing some of the things. Alibaba's got an IPO coming out, and it will be centered not just around currencies. In fact, currencies is only going to be a small part of it. It's going to be much broader in terms of how do you profit from the events that are happening around the world. And I've got some very special guests and speakers that are going to be coming in for that. And so I invite you all to take advantage of that on October 6th. It's free every day from 9:15 to 10:15. Just come on in and check it out and enjoy and share with us. So that's going to be coming then as well. And then, of course, I'll be back in the syndicate tomorrow morning for those of you guys who want to be there with me. Let's still go ahead and take a look over here at the charts. Let's start with the pound. Pound's just been on a tirade. See this gap down? We had a nice cipher pattern in here that just got completely blown out. Then we have a massive gap down, followed by this gap down, of course, I would guess is associated with the Scottish independence. And a little bit of a problem there, market looking to fill that gap, but already very, very bearish. I would not be interested in buying this anywhere. I want to be on the sell side of this, just as strong as this move has been. If we manage to fill that gap, that's probably, you can look left, we're back up in that resistance or previous support level there. That's just going to be a good place to sell that thing off at. Moving over to the yen. Pretty simple here, guys. Just looking at the structure plays, looking at the recent break of structure, market rallied up. There are a couple of different ways you can play these types of trades. I'll show you one on Canada in a minute that gives you a couple of different options. But essentially, market's broken structure here. Look left, structure leaves clues. Where's the most recent structure level? It's right here. What do we anticipate once that level is violated? What do we anticipate about this resistance level? Well, it should become a support level. So if the market will retrace back down into previous structure resistance, should become support, and we may see another rally. Now, there are ways to take advantage of this on the short side, and I'll show that to you right now. If you want to make a counter trend play here, one of the things that you can do is you can simply what I've done here. If you look at this, I'll delete it so you can see it, and I'll walk you through it. I have a couple of different options here. So I have this initial leg of the move, then I get a retracement, and then I get a press higher. Let's take a look at that retracement. Do we get the 382 retracement? Yes, we do. From the swing high here to the swing low, clearly into the 382. When that breaks structure, it gives us an idea that we're into a potential trend continuation trade. Where could that potentially terminate? Where could we potentially see the market give back some of the gains that it's made? Grab our Fibonacci extension tool, swing low to swing high, and back down. And we're going to see that the 127 comes in at about 110.90. Now, the other thing that I can do is I can take my Fibonacci extension level and I can invert the retracement leg. So remember, the retracement came from the high here down to the 382 retracement here. What I'm going to do is take my Fibonacci extension tool and I'm just going to invert that leg of the move. Bring it back down in. And I'm going to see what lines up. 1414 and a 127 extension lining up right there together with the 1618 just a little bit higher than that. So where could we potentially see this market reverse? It's not a guarantee. Keep in mind, it's a counter trend play. So you're looking for this area where the market, if it's going to reverse, where's it going to happen? Well, we're going to line it up here. Take a look. There is our potential reversal zone. Let's look left for a little bit of structure. Okay. I'm just going to go ahead and drag, excuse me, let me just delete that. Let me just drag this out. Okay. Now, as you can see, we don't have a lot of structure here. There's not a lot happening at this level. We've got a little interior support or resistance level in here. Market is not overbought at this level. We were back here at the previous structure level. Then the market gave ground and we rallied higher. So what do we want to look for in here that will give us some sign that the market was ready to reverse? If you're thinking double top, if you're thinking shooting star candle, if you're thinking, you know, a long doji candle, anything like that, hammer, anything like that would be a signal that, yes, this market is looking to reverse at this level. And what we're going to do is we're going to begin to layer our analysis one on top of another, each one complementing another. So we don't have CCI and RSI and momentum indicator along with a MACD just to throw them on there and see which ones point south or which ones point north, because inevitably you get a massive amount of conflicting signals. What we want to do is we want to layer in specific structure and a few key indicators and oscillators that are going to give us a good indication of where markets are looking to terminate. So specifically on this, what we're going to do is we're look for structure. No, we don't have any. We really don't. We've got an inside thing, not really a lot there. We've got the 127 extension. We've got 1414 ratio confluence here, but the market's not overbought. So do we want to sell here? Probably not. We're going to need a lot more convincing at this level that this is going to be a place to short. That doesn't mean the market won't V-bottom out of this, but if it does, guess what we're going to do when the market comes back down into 109.87s? We're going to look to be a buyer because that was a nice little resistance shelf that was violated, and if the market retests that, pretty good chance we're going to see a rally out of there and at least back up to these 127 extensions, maybe up to the 1618, which does have a little bit of a structure level to it. So those are the things that I am watching on that, and that's a couple of different ways you can play it. So you can wait for the retracement, as we talked about on Euro-Yen, or you can simply look for an area where you have Fibonacci ratio confluence along with structure that would give you a good selling opportunity. So for example, here I might take my Fibonacci extension tool, swing high to swing low, and back down in. We can see our 1618 comes in up here. Well, our 127 comes in at structure, and our 1618 also comes in at structure. Market's not overbought yet, right? So we're not at an area where the market is overextended, above 80. So what might we do here? Well, if the market retraces back down into 3800s, we might look to be a buyer. If the market rallies all the way up into the 1618 extension, goes overbought at structure, well, man, that might be a pretty good place to look for a shorting opportunity. And again, guys, what I say about this is we are playing a probability. There is no certainty here. There's no certainty in what we do. All we're doing is playing the probability. Where do all of the indications line up for a reversal versus where do all of the indications line up for a trend continuation trade? And you can be successful doing either one, as long as you're consistent with the analysis and as long as you're consistent with the execution. You get those two things right and you can be successful doing either one of those. But you have to be consistent with both of those things. So let's move forward here. Aussie yen just took a major dive. Major dive. I don't want any piece of this. I don't want to try and we're oversold, but we're not at structure. We've got this interior shelf here, but I'm not interested in that at all. There's a selling opportunity back up here at 92.20s, but not right here at 90.30s. The yen broke out to the upside. Again, looking left, there's your recent structure level. That's where you're going to want to look for a retracement down into 105.25s for a potential continuation to the upside. This is playing out just as the fundamentals would indicate. The Bank of Japan has said that they are going to devalue their currency, and they certainly seem to be willing to do that. Pound yen. Somebody asked me about pound yen and the massive reversal that happened here. And guys, it's the same thing. What am I looking for here? I'm going to invert the last leg of the move. The market broke structure to the upside. I'm looking for 127 extension coming in at structure. Will we go overbought? I don't know. If we go overbought, what do you think I'm going to do there? Yep, I'm going to look to be a seller. So looking to be a seller at that structure level at the 127 extension if we're overbought. I go out to the weekly chart. Look at what's happened here. Okay? Look at the RSI, the divergence across the RSI. Market struggled here, the pound yen at this 175s area. Struggled. So is there a chance that we may see this market finally reverse off and make a new structure low? Yes, it is. Certainly possible. It's also possible the thing just may rally way out of this, but look at where we go. This shelf is like the last stand before we rally, significantly higher, probably 196.30s. So we're talking about a significant little shelf that the market has applied here, and it will be a matter of time before we find out. But if you're going to short, if you're looking for that market to fall off and a reversal here, man, that's really a key area, especially if that market goes overbought. So pound yen, nope. The New Zealand didn't have anything I wanted. Euro Aussie didn't have anything. Some of these things, I'll look more closely at pattern trades for you guys in the syndicate on Monday. But right now, I'll get the Constellation software out and we'll do a big 20 market portfolio search for the pattern formations. And if you want to join me for that, you're free to do that. Just go to the website or sign up underneath this. You can sign up underneath this video. I'll put a link to the syndicate. You can join me there. I know there's something else I should be telling you about right now, but I can't remember what it is. So I will see you guys on Monday, those of you I see on Monday, and the rest of you I will see right back here. Oh, I remember what it is. I'm giving a $1 free month-long subscription. It's not free. It's $1. It's not free. It's $1. A $1 subscription for your first month of the syndicate. Now, the syndicate's $50 a month, so I'm going to give you guys access to the syndicate for $1. And I'm going to be doing that next week. So what that means is the only way that you are going to be eligible to get on for that $1 trial for a full month is to actually sign up on the website for the Forex Market Preview. And I'll put a link to that underneath this video as well. But if you are not signed up, you will not get the email. So if you would like to have that $1 trial option, then please go there and sign up. It's tradeempower.com/Forex Market Preview with dashes between each word. But I'll put the link underneath this. And so I want you, as many of you guys to be able to experience that. I'll have the first module of the training course done by then, so you guys will get the access to the first module of the training course as well that we've developed there, along with the whole back office that we built out, the live show or the live deal that I do, the war room that I do every morning. You guys will have access to that and access to the chat software, the trade floor software, where we distribute the trades and the ideas and all of the different stuff that we do every single day in the syndicate. So that'll be an exciting thing for those of you guys who have been on the fence about it. I'm not real sure. I'm cheap. I don't want to spend $49 to find out. Well, now you don't have to. You can spend $1. So I'm putting that thing together right now for you guys, and it will be coming out next week. So I'll be getting with Darren this week to put all that information together for you. Until then, good luck and good trading. I will talk to you next week. I'll see you then.